What's up, traders, and welcome back to Explain the Charts. Today is November 25th, 2025, and we are doing an in-depth analysis of Amazon, ticker symbol Amazon. There is a ton of news swirling around the stock, from massive AI spending to conflicting analyst ratings, and the chart is showing some incredibly interesting price action. We're going to break down all the recent news and then dive deep into the charts to identify key levels and potential future moves. So let's get right into it. First, let's cover the current events that are shaping sentiment around Amazon. Just yesterday, the stock jumped over 2.5%, largely driven by renewed enthusiasm in the AI sector after Alphabet announced an upgraded AI model. This highlights how sensitive Amazon and other tech giants are to the overall AI narrative. However, this comes just days after the stock saw significant drops due to concerns over lofty AI valuations and a broader tech pullback. Adding to the uncertainty, Rothschild & Co. recently downgraded the stock from buy to neutral, citing concerns that the expected growth from generative AI in its AWS division has already occurred, with limited upside remaining. They also noted that AI investments are currently diluting returns for the cloud giant. On the other hand, the bullish case is being fueled by Amazon's aggressive expansion. The company recently issued a $15 billion bond sale to fund AI infrastructure and plans to invest up to $50 billion to boost AI and supercomputing capacity for U.S. government agencies. Furthermore, market sentiment among analysts remains a strong buy, with a consensus 12-month price target of over $280. Rosenblatt also just maintained its buy rating. So we have a classic battleground: huge long-term investment and potential versus short-term profitability concerns and valuation questions. Now let's see how this news translates to the daily chart. Looking at the bigger picture, Amazon has been in a strong uptrend since the major lows back in April of this year around $161. The stock rallied aggressively, culminating in a 52-week high of $258.60 on November 3rd. This high was set immediately following a massive earnings-related gap-up at the end of October. Since hitting that peak, the price has seen a significant and healthy pullback of over 10%. Let's zoom in on this recent action since late October, as this is where the most important story is being told. Here you can clearly see the massive gap up on October 31st, where the stock closed around $230 and opened the next day near $250. This created a huge price gap, which often acts as a major support zone. After peaking at $258, the price pulled back sharply through mid-November. Notice how the selling pressure stalled out right around the $217 to $222 area. This level was tested multiple times between November 18th and November 21st, establishing it as a very strong short-term support level. Yesterday's powerful green candle, closing near $226, represents a decisive bounce off this support, correlating perfectly with the renewed positive AI news we just discussed. Now let's switch to the hourly chart to get a better look at the short-term structure. From this view, we can see the consolidation that took place last week. The price was essentially range-bound between the support at $217 and resistance around $223. Yesterday's move was a powerful breakout from this tight range, showing significant buying pressure coming into the market. The previous resistance around $223 should now theoretically act as initial support on any minor pullbacks. The next level of resistance to watch on this time frame is the high from yesterday's session at $227.33. A clean break above that level would signal a continuation of this newfound bullish momentum. For our day traders, let's drill down to the 15-minute chart for the most recent session. As you can see, yesterday was a clear and strong uptrend day from the open. The price gapped up and never looked back, putting in higher highs and higher lows throughout the session. The minor consolidation areas, such as the one around $225, can serve as micro-support levels for today's trading. The key will be to see if the price can hold above yesterday's volume-weighted average price, which sits around $225.70. Holding above this level would suggest buyers are still in firm control in the very short term. Okay, let's go back to the daily chart to recap and discuss potential scenarios. To summarize, the key price levels are absolutely critical right now. Major resistance is the 52-week high at $258.60. Before that, we have minor resistance levels around $235, which was a former support level, and then again near $244. To the downside, our most important support level is the recent consolidation zone between $217 and $222. If that level breaks, the next major support would be the top of that earnings gap, around $230 from the October 30th close, though filling a gap that large would be a significant bearish development. So, what can we expect? My bullish scenario, which I'd place at about a 65% probability in the short term, is that this AI-driven momentum continues. Look for a break and hold above yesterday's high of $227.33. If that happens, a move to test the $235 resistance zone is highly likely. This scenario is reinforced as long as the price stays above the key $222 support. My bearish scenario, at a 35% probability, would be triggered by a failure to break above $227 and a subsequent drop below the $217 to $222 support zone. This would indicate that the recent bounce was just a dead cat bounce and that sellers are taking back control. This could be triggered by negative broader market news or profit-taking in the tech sector. Keep an eye on news related to Black Friday and Cyber Monday sales figures, as that could be the next major catalyst for the stock. And of course, always watch the broader market sentiment. That's all for today's analysis on Amazon. Remember to be patient and wait for confirmation of a break of these key levels before making any decisions. Please keep in mind that this video is for informational and educational purposes only and should not be considered financial advice. Trading involves risk, and you should always conduct your own research and due diligence before investing your capital. If you found this analysis helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Amazon in the comments below. Trade safe, and we'll see you in the next one.